Bitcoin is on the verge of breaking down. And in today's video, I'm going to show you the exact levels I'm looking at where Bitcoin should find support and where I'm looking to place a long, okay? So without further ado, we're going to get straight into it very, very quickly, go over what I'm seeing in the market, how you can position yourself for what's coming up, because the last thing you want to do is get wrecked in this market. All right, okay? So if we go straight into it, let's have a look here, get that camera loaded. All right, let's just start with what we're seeing currently on the backdrop. So we can see here we're on ticker BTC USDT. Bybit is the chart I'm looking at today. All right, so let's identify where we have seen our higher term time frames levels of resistance and support on a weekly and daily basis. So we have our daily up above ourselves and we have weekly down here at 100,000. So we are range bound since we had that large drop. So see this large drop here, that was the flush out with altcoins that we saw at around, when was that? The 10th of October. So around 6 days ago, we saw the massive leverage flush out in the market. Since then, we've been range bound, which is exactly what I've been expecting, because that's normally what happens when you have a very large wick to the downside and a retracement up of what size was that? Like 10%, was it? 11%. You then subsequently see price range and consolidate as people who did take positions down here start taking profits, and people who are also traumatized from this drop don't necessarily want to buy up right now. What this usually does in price action wise is it trades sideways until a decision is made. And I'm leaning more bearish in the sense that we're going to take out some lows, then resume our way up, okay? Whether it's these lows down here at 107 or whether it's the lows down here at 100,000 and a bit lower down there, okay? If we do break below those levels, I do think the bear market's in. Specifically, $96,000 is the level I'm looking at as a invalidation for the bull market, okay? If we go down there, I think the bull market's toast. Now, let's look into what's going to happen in the immediate term and what we can be looking at for a potential long. So if we zoom right into this chart in the 4 hour, we can see we found resistance here at our, people will call this a fair value gap, we can call that here too. So you can see here, there was this fair value gap here. We found resistance into that region there. Was it a high confluence region? I really don't think so, because there wasn't any statistic based level. You can see here the CC, which is just the golden pocket of the drop, wasn't exactly to the level. But that being said, it was pretty close. So you can view it as an overall region. Let's see what the VWAP was. VWAP was relatively close, but it did front run that level and come down before we ended up taking the Fibonacci 0.618. So right now we are in this local consolidation range, as you can see here. So let's highlight that. We'll just remove this so you can't see. You can view it like this. So we have our top of our range and the bottom of our range here. What's happening now is we are testing the lows of this range 3 times, okay? So you can see that 1, 2, 3. We tested the top once and twice, and tested the midpoint once, okay? Now, usually when you have multiple touches on the downside, it's signifying weakness, and I do believe the price is going to break through. And I'm not just saying that because I think it visually looks like it's going to break through. There's a lot of longs opening at these lows here. So when you see a lot of longs opening around here, when I say longs, I mean market long positions. And we can see that via the divergences in the order flow. And I'll just pull that up very quickly over here so you can see. So what we're seeing here is large longs opening. So you can see open interest, which is this bottom line here, or bottom chart candle, is positive open interest, right? And the open in the delta of that position, specifically that 30-minute candle, was positive 20 million. Okay, positive 20 million longs in the market, positive 16 million longs in the market. Now, yes, a few of these would have closed here with the negative delta and declining open interest. However, majority of them are still in. We had 9 million here, we had 11 million in here. You can see here we did have a bit of a closure of longs here, but I would say overall, our aggregate would be that we have more longs, like more overall aggregate longs in the market right now. So let's have a look here. You can see that there's no specific divergence in terms of if you can see a bullish or bearish divergence right now, but I would say that there's definitely more longs that are positioned in the market. I'm just trying to see here, did we take out that low of the wick? Let's have a look here because that would be quite crucial. Did we stop out those positions? because we had a pivotal point here. No, we still have that low that's untapped. So that's very unlikely that we're not going to take those lows out. In terms of where we are looking at for a target to the downside, if we do go down there, let's have a look, right? So we have major, let's have a look at our volume profile so we can see where volume resides in this range. We've got volume here and volume here. So 107 is a highlight level for me. The reason being is it's got confluence with these lows here and this volume node here. So that could be extended to this side here. It's also under the backdrop that we break down here, taking out these lows. So it's a good spot to be looking for a potential long opportunity. Let's see if we draw our CC, we can see that also coincides here with 106, this region there too, okay? That being said, it's still a region. We'll be looking at what the order flow is saying at that point in time. Other than that, let's see if we have any other confluence. 105 is a good level too. Takes out that wick low. 94, 96. Well, as you can see right now, we have our volume POC here. We're just trading above that right now. And specifically, we'd be looking for 107, 104. And then my last resort level would be this low here. If we break below that and start closing below this, I think that's going to be very, 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 very bearish as the market structure has then shifted. Reason being is because you've taken out these highs at the top, you've taken out these lows, you've broken down this wick low, you've closed beneath this, and that looks like a wick off distribution to me. Okay, right now it doesn't. The market's indecisive. That's why we had that chop out. As you can see here, we had the chop out to the upside, the chop up to the downside, and yeah, so that's where we're currently sitting right now in the market. In terms of resistance, let's have a look. If we map out this range, we can see, yeah, so we're just trading within this little mini range. That's literally what you'd be expecting. We're bouncing off the value area low, ranging in between the point of control, as you can see here. So up, resistance down. I'd expect a breakdown following here soon, personally, okay? Breakdown levels, 107, 105, and $96,000 as key points to be looking at. Do I want to put anything else on? Yeah, I see that's basically what we're looking at. And then the order flow is going to be important to see. What ideally you want to see is a lot of, so let's say we get to this level here, that's 107. You want to be seeing a lot of short positions open upon reaching that level. The reason that's going to be good is because that's fuel to the fire essentially. So if you have a lot of short positions opening into a support level and we start bouncing from that, contrary to popular belief, that's actually very bullish because people think, oh, there must be a lot of shorts, so therefore the market's going to go down, but it's quite the inverse actually. Because what happens is they're trapped. So let's just say price comes down here. If everyone starts shorting in this region, well, if price inverts up here, well then, let's say we go up 2%, you might trigger some highly leveraged positions, right? In terms of shorts. I mean, they have to buy back, so that triggers a cascade up instead. And then by that time, you've changed market structure, and then you're ready for the resumption to the upside. So in terms of good pivots, you want to see that happening in terms of the order flow. In the meantime, I expect lower prices to come on Bitcoin, and we will take it step by step. Yeah, so I hope that video was informative. Mark out these levels, 107, 104, 90, and 96. At the end of the day, it comes down to what we're seeing on a reaction basis at these levels. Because if we slice through them and no reaction, then obviously it wasn't a good level to be looking at, okay? Anyway, guys, peace out. I hope you enjoyed this video, and I'll catch you in the next update. For now, have a good time and welcome to the Isaac Finance Show, and goodbye.